This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am Chris, and today is Wednesday, May 31st, 2023, and that means that once again it is DCA Wednesday. Are you ready to grow that stack? Well, I am still on the road, coming to you from somewhere in the high desert of New Mexico, so I was worried that I would have to do a pre-recorded episode or maybe get my stack done and get an episode out late. But I'm here, I'm all set up, I have my laptop ready to go, I've got all the data I need, so we're going to do this live. Currently, at the time of this recording, we are at a block height of 792,320, and Bitcoin is ringing in at a US dollar value of $27,140, or 3,685 sats per dollar, and if you were staring at price charts all week, that looks like Bitcoin kind of tanked in the last day or so, but that's actually up almost $1,000 from where we were last week. So I've said it often, more than once, that, if you just zoom out, well, if you zoom out far enough, Bitcoin is always up and to the right. But even if you just zoom out by, and look at the picture like 1 week at a time, like we do every Wednesday, that the ups and downs in Bitcoin have been less violent, Of course, that kind of goes hand in hand with what several influencers have said. It started out, I think, with even Charlie Lee a long time ago, back the previous bull run, in 2017, actually, when he was predicting $100,000 Bitcoin by the end of 2018, which turned out to be spectacularly wrong, and we haven't heard from him a whole lot recently since then. But I digress. He first started pointing out that, Bitcoin makes all its gains in just a handful of days a year. I think he said it was 10. It's 5 to 10 is what a lot of people have been saying on, in the Twitter sphere, et cetera, that's one of the reasons why you particularly shouldn't try and time the market when it comes to Bitcoin, because, if you are timing the market, you're going to miss out on those gains potentially. And we've said that, had we waited, for example, when Bitcoin dropped into the upper $16,000 range in June of last year, that, there were people out there calling for Bitcoin to hit 10,000 and they were going to wait till 10,000 or below before they would buy. And clearly they missed out on $16,000 Bitcoin. By DCAing so far for almost the last 2 years, we've bought close to the high and we bought close to the low, but we've purchased at an average purchase price that has been clearly more advantageous than had we YOLO'd in, for example, when we first started back in July, almost 2 years ago. I think the Bitcoin price was around 39,000 at that point in time. So obviously, if we'd YOLO'd in, we would have purchased at a lot higher than we're going to purchase today and that we purchased in the past. Granted, we purchased all the way up and then all the way down, but that's the beauty of dollar cost averaging, is it smooths things out for you. And by zooming out, just onto a weekly basis, here we are with Bitcoin actually up compared to last week, as opposed to waking up, yesterday and seeing Bitcoin crashing or whatever. People were saying, when Bitcoin went down in value, anticipating the chaos in Washington this week. We'll get into that in a little bit, but real quick, back to the vital statistics. We are currently 47,680 blocks away from the halving. I've said on multiple episodes, if you have never experienced a halving before, that it is almost like, New Year's Eve or the Chinese New Year for Bitcoiners, that even with COVID, there were celebrations. Most of the big parties ended up being live streams, because it was right after it was about a month or so right after the peak panic of the lockdowns. But prior to that, there were parties all over the world, in the Bitcoin capitals around the world. And there are already people announcing their plans for the next halving and the parties that they're going to throw. I'm sure Bitcoin Magazine will throw a huge party. So if you haven't figured out where you're going to be next spring when the halving occurs, you'll start hearing about some neat stuff, I'm sure, because it is a heck of a celebration. And currently it's looking like it's going to be a 1 day sooner. Last week, the estimated halving date ticked up from April 22nd, 2024 to April 21st of 2024. And according to Clark Moody's dashboard, he's estimating that it's now going to take place on April 20th, 2024. Of course, that is a fluid date because, again, Bitcoin halves the miner reward every 210,000 blocks, not every 4 years. And so depending on how fast or slow those blocks come in, that we ultimately won't know when the halving is going to be until it happens. But the best guess right now is April 20th of 2024, so less than a year away. And the excitement's already starting to build. But, 6 months from now, sometime next fall or whatever, it's going to be exciting, trust me. And speaking of statistics, Bitcoin's market capitalization is up about 15 billion since last week, corresponding with the slight increase over the price from when we did our last DCA Wednesday episode. Bitcoin's current market cap is 526.2 billion. Last week it was only 511.2 billion. Market cap, might be more useful to some than others. A lot of people call it kind of a BS statistic, but I think it's, useful to give an overall picture of just how much Bitcoin is out there in terms of US dollars, how much of that store of value narrative we've taken over, how close to becoming a global reserve currency Bitcoin has become. Because when we see hyper Bitcoinization, Bitcoin's going to have, a multiple $trillion market capitalization. Even when Bitcoin hit its previous all-time high, it was over 1 trillion. So I think we'll be in the $10-20 trillion range. If we see a $10 or $20 trillion range for Bitcoin's market capitalization, that'll be a pretty good indicator that Bitcoin is being adopted as a global reserve currency, at least by the plebs, even if the governments aren't, if the central banks and governments aren't hoarding it. If you value your wealth in shiny yellow rocks and little round coins and Peter Schiff bucks, it's going to cost you a little more gold this week to purchase just one Bitcoin than it did last week. It will currently cost you 13.8 ounces of gold to purchase just one Bitcoin. That is a full half an ounce of gold more than last week. And a half an ounce of gold is worth a heck of a lot of US dollars. So it might sound like it's just 0.5 increase over last week, but that's a tremendous gain on gold. A lot of investors don't even buy in, the smaller investors don't even buy full ounces. And you can buy a tenth of an ounce or you can buy in grams of gold. So that's a significant amount of gold. And one day soon, it'll be more than a pound of gold, mark my words, to purchase just one Bitcoin as gold trends to zero in Bitcoin terms. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 1,517 large pepperoni pizzas from Papa John's. That is more than 4 years worth of pizza, one large pepperoni pizza a day for 4 years, 1 month, and about 24 days. A heck of a lot more pizza for the buck, or pizza for the bang for the buck, pizza for the Bitcoin. Then Laszlo got, the 13th anniversary of Bitcoin Pizza Day was last week. And that was when Laszlo ordered 2 large Papa John's pizzas for 10,000 Bitcoin. And today you could get 1,517 Papa John's pizzas for just 1 Bitcoin. So a fun metric I like to follow. Probably a little more important on Pizza Day, but I like to give that update every week. It certainly kind of shows how Bitcoin compares as an inflation hedge because, Papa John's had to increase their value, increase their US dollar price of pizzas by a full $1, a couple weeks ago. And it's still trending to zero in Bitcoin terms. The mempool is looking about exactly the same as it did last week. Last Wednesday, there were about 92 blocks worth of transactions pending in the mempool. I know Odell, for example, says there is no such thing as the mempool. There are mempools, and you're just looking at one mempool. And I'm actually looking at 2 mempools. I'm looking at my mempool and my Umbral node, and I'm looking at, actually I'm looking at 3. I'm looking at mempool.space, I'm looking at Clark Moody's dashboard, and I'm looking at my Umbral mempool. But mempool is an abstract term, and the mempool actually, I think actually, Odell, there actually is a mempool. A mempool is the collective transactions out there. And sure, not every pending transaction appears on every node. And so maybe my node isn't exactly the same as everybody else's, and maybe my mempool isn't the mempool, but the mempool is a collective thing. So I'm comfortable in saying the mempool. I know on Citadel Dispatch the other day, it was actually 3 or 4 Citadel Dispatches ago, Odell was railing on his guests every time they said the mempool. He's like, there is no mempool. Say your mempool. And all of them, and these are OGs, kept saying the mempool. And I'm comfortable saying the mempool because there is a mempool. And my mempool isn't the mempool. My mempool is my node trying to give me a snapshot of the mempool. So I disagree with Odell on that, although I don't disagree with him on a whole lot. So, and it's not really that important. We're going to continue saying the mempool. Anyway, it is basically looking almost identical to last week, with 92 blocks worth of transactions currently pending. Along those lines, the fee estimators are looking like, well, they're looking a little more expensive than last week. Currently, it's recommending a fee of 62 sats per VByte to guarantee that your on-chain transaction is included in the next block. That is up from 54 last week. And currently the same estimator is saying it will cost you 19 sats per VByte to guarantee your transaction clears within a day. That is exactly the same as last week. Although last week they did say that a 1 sat per byte transaction would eventually clear within a week. And now the estimator is saying that no, it'll take a minimum fee of 16 sats per VByte to guarantee your transaction is included even with a week. Mempool.space is giving a slightly different picture. They're estimating that will cost you, well, they're recommending a 74 sat per VByte minor fee to guarantee your transaction, or at least for a high priority transaction. They do it a little bit differently. They don't break it down by times. They do high priority, low priority, no priority. So their high priority recommendation is 74 sats per VByte. Currently, that works out to about $2.81. That is a lot more than the 10 cents or so that it would have cost not too long ago to send a transaction, but nowhere near, the insane fees we saw in 2017 when it could cost you up to $50 worth of Bitcoin to send an on-chain transaction. I know that because at the time I wasn't as much of a Bitcoin maxi as I was, and believe it or not, I thought about moving some of my Bitcoin into gold when it was at its all-time high, when it was around $17,000 in December of 2017. And I didn't. And the only reason I didn't is because the transaction wouldn't confirm for less than like $50. And it just wasn't worth it. I was only going to buy, I don't remember what the price amounts per gold was back then, but let's say it was around $1,000, and it was probably a little more, but I wasn't going to spend $50 to make a $1,000 purchase ish, right? So $2.81 is a lot better than 50. And keep in mind, Satoshi-wise, that was a heck of a lot more sats because Bitcoin is only worth 17,000. So let's just, for fun, say it was worth twice as much as it is now. So that $2.81 would have been functionally almost $5 in 2017 terms. So the number of sats it would have taken to guarantee you were in the next block were probably about double more than double what it would have, well, way more than double, because 74 sats would not be worth, 74 sats per VByte wouldn't be a US dollar fee value of $2.81 back then. It would have been more like $1. And so we're talking about 25x more expensive in sat terms. All right, that metric that I like to follow, the 24-hour transaction rate, and again, that's on-chain transactions, is up from last week. We'd been looking at 7, almost 8 transactions per second zooming through because of the ordinals, the inscriptions, the stamps, those BRC20 scam coins. And then last week it dipped from 7.06 down to 4.61 transactions per second. Prior to this whole ordinals thing, prior to Taproot, anytime we saw 3.15 or above transactions per second, on-chain activity was screaming. Bitcoin was really meant to peak out at about 4 transactions per second max. And so that all changed with ordinals and inscriptions because they're very small transactions as opposed to an actual Bitcoin transaction. Most of their data is in the header and the segregated in the witness. And so it's a smaller transaction. And that's one of the ways that using a soft fork, they increase the size of Bitcoin transactions by changing the weight of the transaction. Anyway, long and the short of it is it had dropped from 7.6 to 4.61, and currently we're looking at 5 transactions per second. So a little more activity than last week, and that probably explains why those fees are up just a little bit since last week. Also, since last week, we did have a difficulty adjustment in how difficult it is to mine a block of Bitcoin. It seemed like those were always occurring on Thursdays right after our DCA Wednesday episode. And so there was a 3.4% increase in difficulty. And that looks like it might have been an overshoot because all the fee estimators I'm looking at right now, well, they're all over the place. Currently, we're 1,984 blocks until the next halving. And Bitcoin makes a until the next mining difficulty adjustment. And Bitcoin makes that mining difficulty adjustment every 2016 blocks. So basically, we just had one. We're only 32 blocks away. I mean, it happened just 32 blocks ago. So it just literally happened. And in that time, since then, the blocks that have been coming in have been taking a whopping 13 minutes and 5 seconds on average. And because of that, the forecasters out there are showing a rather large difficulty decrease. But, we're only a handful of blocks into this halving. I keep saying halving. I'm just obsessed with the halving, aren't I? We're only a handful of blocks into this difficulty epoch. And so the numbers are completely unrealistic. You won't even have an idea of what it's going to look like until we're less than 1,000 blocks away. And even a day or two before we'd be expecting the next mining difficulty adjustment, anything could be subject to change. A new mining facility could come online, one could shut down. So I hesitate to even report these statistics because I've never seen it this wide, this big of a blowout. But BTC.com, which runs a mining pool, for example, and usually has a pretty good grasp on things, is estimating the difficulty adjustment is going to only be minus 0.84%, whereas Clark Moody's dashboard is estimating that it's going to be a dramatic 23.4% decrease. And I think that's because his dashboard is taking the most current data they have, and that's really only got a handful of data points, so it's fairly unreliable. For example, look at it this way. Finding a block is a lot like flipping a coin, right? If you flip a coin 100 times, theoretically 50% of those should be heads, 50% of them should be tails. But if you flip a coin only 3 times, you might get 3 heads in a row. And that doesn't mean statistically you're going to get, all heads every time you flip the coin, because you don't have a big enough sample size. You haven't done it enough time to be truly random. And so the same thing when we've only got 32 blocks or so into the epoch, we could have had all 1 hour blocks, for example, and then all of a sudden they could start coming in, every minute or less. And that's why it's an average. And I probably spent too much time rambling on about that because I'm pretty sure but currently those blocks are coming in slower than the 10-minute average that Bitcoin is designed to shoot for. So it's looking like tentatively we're going to have a pretty sizable difficulty decrease for those of you who are mining at home, for example. Real quick, I want to give a big shout out and thank you to all of you listening on your favorite podcasting 2.0 apps such as Fountain App and Breeze Wallet, etc. I prefer Fountain personally for 2 reasons. Mainly because I'm a podcaster. When someone sends us a boost on Fountain, it's a lot easier for me to see. Sometimes if you send a boost on another app such as Breeze Wallet, it gets buried in my activity on Fountain, and so I have to search to make sure I don't miss out on your shout outs or on your boosts. But when you do it on Fountain, it appends straight to the episode that you boosted, and we do have one boost to read out there. Leggy boosted us 5,700 sats and simply says thanks with an exclamation point. Well, it technically said THX, so abbreviated thanks, exclamation point. So thank you, Leggy. Leggy's been a long-time supporter, so thank you very much. We definitely appreciate you, and it really makes me feel good to see that coming in. I know it seems trivial, and we're not really doing this for the sats, but when I'm just sitting here talking into a microphone and staring at a wall, or in this case, staring out a window, looking out at the desert, I can't see you, and I can visualize you in my head, but when I get some feedback, if you send me a DM on Twitter, if you send me an email, if you send us a boostergram, I know who you are and where you are, and it feels good. It makes you, knowing that what I'm doing is appreciated. So thank you. Thank all of you, and specifically thank you, Leggy, for that boost. And speaking of our listeners, the geographic distribution of our listeners is pretty much the same as it was last week. There is a tiny little bit of a change. Currently, 51% of you are listening from the United States. That is exactly the same as last week, so thank you. 13% of you are listening from Argentina, so muchos gracias, amigos. 7% of you are listening from Deutschland, from Germany. So I almost said muchas gracias again. It's amazing how when you try and juggle multiple languages, you tend to blend them up sometimes, get them jumbled. I used to work in a capacity in Arizona, actually, where a large percentage of my people I interacted with spoke Spanish, but I had taken German in high school and college, and I never took Spanish. I kind of picked up Spanish out of necessity at work, and so every once in a while I would start blending German words randomly into the Spanish that I was trying to speak to people, and they would look at me cross-eyed. Sometimes you would run into somebody who spoke both German and Spanish, and they just laugh because they knew what I was doing. But danke schön to mein Freunds in Deutschland, to the 7% of you listening from Germany. Likewise, 4% of you are listening from Luxembourg. So Morien to those who speak Luxembourgish, or danke schön for those in Luxembourg that speak German, or danke schön and Morien to those that speak both. 3% of you are listening from Colombia, so muchas gracias once again, amigos, in Colombia. 2% of you are listening from Canada, so thank you to those of us, as Greg Foss likes to say, living rent-free in our attic. 2% of you are listening from Spain, muchas gracias, amigos. 2% of you are listening from Venezuela, also muchas gracias. Now here's where the change is. Australia's back on the board. Australia peaked onto the board a couple of weeks ago out of nowhere and then just dropped off. But they're back. The Australians are back. So thank you very much. Good day, mates. To the 2% of you who are listening from Australia, and you're coming in at number 9. And that's where the change is. You bumped Sweden down to number 10. Still 1% of you are listening from Sweden. That's the same. It's just that you're now the 10th most. You're now ranked number 10 with Australia coming onto the scene. So thank you to those of you in Sweden. Nobody has told me how to say thank you in Sweden or hello in Sweden. I guess I could look that up, but I was kind of hoping that there are listeners out there in Sweden, obviously. So maybe one of you can DM us or send us an email, or even better, a boostergram, and let us know how to say hello and thank you in Swedish, or whatever language you speak in Sweden, if you were one of the people listening to us in Sweden right now. And that rounds out the top 10. I am going to give a shout out to France, because France has moved back up into the 11th position. They've done that a couple of times. France has never broken the top 10, but they have moved back up to number 11 after having fallen down on the charts for the last 3 or 4 weeks. So I don't want to break the rules by giving a shout out to those of you in the countries, but other than the top 10, because there's so many of them, I'd spend the whole podcast just trying to say thank you. But in this one case, bonjour to those of you in France. Merci for listening to us, and thank you. Merci for listening, right? All right. Before we get into the reason we're here, before we do our DCA stack, just a real quick look at the news. Well, there's a lot of news out there, but normally, well, actually, it's been kind of quiet. I mean, there is a lot going on. There were a couple of big stories that there was a lot of hullabaloo going on last week over a few different things, but it seems like, well, we're in that accumulation phase, just like in 2019 when Bitcoin went sideways for about a year. We're in that accumulation phase where it gets kind of quiet, and that's cool because that's when a lot of the developers tend to get things done. It seems like, during the bull run when we're just going parabolic, there's all kinds of news. Everybody's excited. The memes are pumping. People are releasing Bitcoin tribute songs, and it's just a lot of fun. And then when the bear market hits, when Bitcoin when Bitcoin retraces, there's a lot of news as well, and just a lot of activity. But then during the accumulation phase, it kind of sometimes gets a little bit quiet. That doesn't mean there's not a lot going on. It just means that it gets a little bit more quiet. People don't obsess with it as much. So the big things I want to talk about are the price. Despite the fact, if you're staring at the charts, and I've already talked about this, Bitcoin is actually up a bit since last week, even though it looks like it dropped in the last few days. And price shouldn't really be an issue for you. The only reason you should really care about the price is because, the lower the price, the more sats you get. Unfortunately, we're going to get fewer sats than we did last week, but we're still going to get a lot more sats than we did when we were purchasing at 30, 40, 50, even 60,000 US dollar per Bitcoin. So I'm not really concerned about the price. I'm not depressed. I'm not excited, and neither should you be. But it is cool. It is cool that we're going to get somewhere in the neighborhood of 72,000 sats for our $20 stack today. Speaking of price and financial news, probably the biggest news that affects everybody, Bitcoin or not, and more than just Americans. It affects people around the world. Is the U.S. debt limit debacle that's been going on. As you probably know, the United States Treasury was running up against a hard cap on the amount of debt they were allowed to incur. And instead of doing the logical thing, like saying, well, if we don't have the money, how about all our credit cards are maxed out, instead of getting another credit card, why don't we just spend less? Apparently that wasn't even an option. It was either default or get another credit card, right? So as of just a few minutes ago, the news is on a TV downstairs format. I'm not watching it, but the people I'm with are, and I heard the live tally of, they're not watching C-SPAN, but it was very similar. That the vote was coming in the U.S. House of Representatives, and while I was preparing the notes just minutes ago, the U.S. House of Representatives had passed the debt limit deal, and they announced that it's going to go to the U.S. Senate now, possibly as soon as tomorrow. All they said was it's going next Thursday, but tomorrow is Thursday. So if tomorrow's Thursday, I would usually just say tomorrow, right? Maybe even Thursday. Normally when I say next Thursday, I'm talking about further away, further down the week. So even if it were Friday, you would refer to next Thursday as next Thursday. But if on Wednesday, today is Wednesday, tomorrow's Thursday, it seems awkward to me to refer to tomorrow as next Thursday, but technically it is next Thursday. So maybe it goes to the Senate tomorrow. I don't know what the chances of it passing unmolested, unchanged, undisturbed is. But if it does, one positive note is that it does stop Biden's minor tax. So that directly affects Bitcoin because, as you remember, President Joe Biden wanted to levy a 30% excise tax on Bitcoin miners because they were using electricity and therefore harming the world. And obviously, Bitcoin is probably one of the more green industries that you could possibly get into. I don't need to beat this dead horse. For example, Tesla's charged with electricity, but they call Teslas zero-emission vehicles, right? Bitcoin miners use electricity, but the press says that Bitcoin causes emissions. It's just hypocrisy. It's a double standard. It's just an attack on people that don't like Bitcoin because they want to control you, and Bitcoin is something they can't control. But the debt ceiling bargain, the debt ceiling compromise it doesn't raise the debt limit at all. It basically suspends it for 2 years. It says the government can borrow basically unlimited money for 2 years. And they don't even really, the Republicans are trying to say they got some cuts in it. They didn't really get any cuts. What they got is that the budget's going to be capped, but it's not even going to be really capped. That cap is going to be indexed for inflation. Plus the year after that, they're going to let it grow by like 1 or 2% plus index it for inflation. So the money printers are going to go burr, plebs, any way you slice it. And that's ultimately good for Bitcoin because while it's bad for you, it's bad for society, it's bad for everybody else. If you're a Bitcoiner and you have a stack to fall back on when they eventually collapse the US dollar because of all this chicanery, you'll be safe. You have a lifeboat, a life raft sitting there waiting for you. All right. Speaking of the debt ceiling, Tur Demeester on Twitter tweeted out a political cartoon that's kind of funny. It just has a turd emoji and a peace emoji, but basically it shows the U.S. Capitol building with the top popped off with a little pop noise and sewage spewing out the top like a water fountain. And in the sewage plume, the words debt are written. And then there's a caption bubble coming up from the Capitol building showing that basically the people inside the Capitol are saying, "Why fix the plumbing when we can just raise the ceiling?" And that's a kind of a accurate and funny way to visualize what they're attempting to do in the United States Congress right now. The other big controversy last week was the Ledger controversy. We spoke about it last week, and I'm sure you heard about it all over the place, where Ledger's recover feature was basically going to allow people to pay a monthly fee to where they could lose their Ledger, they could lose their backup seed words, and Ledger could recover their wallet for them on a new device without anything else other than the fact they were going to shard their keywords and spread them amongst 3 custodians in 3 separate countries, all countries that were part of the Five Eyes, all countries that could easily collude to confiscate your Bitcoin. And Ledger even admitted if they were faced with a subpoena, this would enable them to turn your private keys over to a law enforcement agency in whichever country subpoenaed them, whether it be the United States or somewhere in the European Union. So it was horrible. It had me abandoning my ledgers. A lot of influencers out there and a lot of Bitcoiner OGs were saying it's not necessarily as bad as people might think. Andreas Antonopoulos and Jameson Lopp did a big podcast about it. Jameson Lopp was also at Bitcoin 2023 and spoke about it. And for example, Andreas Antonopoulos said he would never use a ledger for his cold storage, but he uses a ledger for his business spending because it's his walking around money. He doesn't keep any money on a hot wallet, so to speak. All of his money, all of his Bitcoin. I keep saying money, and Pubs, I'm sorry. But I'm talking about the US dollar. I'm talking about debt. So I've got money on the mind. Got my mind on my money, and my money on my mind, as the song goes. But basically, he uses his ledger for smaller transactions, smaller amount of money that most people would normally keep on a hot wallet. And so it's one step, even though there's potentially, a security issue there or a trust issue there. If it's his money that you would normally keep on a hot wallet anyway, it's still more secure. Either way, I'm abandoning my ledgers for other devices, have abandoned my ledgers for other devices, even my Bitcoin that I would consider my hot wallet. And I don't really have a hot wallet because I don't spend a whole lot of Bitcoin, right? We're stackers. So we're hodlers. So what I would consider my hot wallet is only Bitcoin that I'm keeping, that I'm aggregating until I have a large enough stack to send to my hardware wallet because, as fees go up, let's say it's going to cost you 70,000 Bitcoin or 70,000 Satoshis to send a transaction. If your transaction is only 100,000 Satoshis, well, that's a huge waste. The vast majority of it is going to be eaten up in fees. So personally, I had been sending primarily in batches of 1 million sats because, 100,000 sats even would only be 10% of your million sats. So all of a sudden it's a little bit less of a sting if fees go up. That's a you do you thing. And there are use cases where you might want smaller UTXOs, but I'm getting on a tangent here. What I'm saying is the only kind of hot wallet I have is one that's accumulating small purchases. Like for example, today we're only going to buy about 72,000 sats. And that's way too small to send to our hardware wallet because that might be dust. If fees are up to 72,000 sats worth of, if it goes up to where it would cost you 72,000 sats to pay the miner fee, then that Bitcoin would be unspendable, unmovable. It would be lost, basically, wasted Bitcoin. So that's what I have for a hardware wallet. And so, for a hot wallet, basically. That's my only hot wallet use for the most part. And obviously you can't secure that on a hardware wallet because it would be unspendable. All right, so Ledger did kind of calm the controversy down quite a bit on the 23rd. So just a couple of days ago, less than a week ago, or about a week ago, they released, quote, Ledger's open source roadmap, where they kind of said they basically promised to start open sourcing as much as humanly possible. Obviously, they can't open. The biggest problem is they can't open source their chips and their secure element because they're subject to NDAs, non-disclosure agreements from the manufacturers of the chip. So what they said is, quote, we'll gradually open source most of our operating system, starting with Ledger Recover to make it as audible as possible. We'll release the Ledger Recover product as soon as this firmware part of the code is published. The other parts will take a little more time since it needs to be refactored to abstract the chip-specific characteristics under the NDA from our operating system. So basically, that got back to two things. They delayed the rollout of the Ledger Recover feature, and that was only part of the controversy because if they could do the Ledger Recover feature and tell you about it, that means they could also, and since their software isn't open source, that means you could already basically have that feature on your Ledger and not even know it. That was why that people wanted to be open source. Obviously, they're not going to completely open source everything. I think the best way I heard it described is they're going to make most of their operating systems source viewable. It's not the same as open source, but at least you can view the code. And so that's a little more trust minimized than pure open source. And again, they're still hedging, saying because they're NDAs, there are going to be things they won't be able to open source, which means you still won't be able to trust your Ledger. I still will never fully trust Ledger ever again. Again, this is the sort of thing that any hardware wallet could do. Any hardware wallet is theoretically capable of extracting your private keys in a similar fashion if the firmware is changed. But there even if you're not a coder, there are enough people out there, if you use a major mainstream hardware wallet, not something obscure, but like a Trezor or a Cold Card or a Blockstream Jade, open source hardware wallets where you might not be able to read the code, but they're mainstream enough that hundreds of Bitcoiners are reading the code. At least that eliminates that trust model a little bit. Whereas if anything is even partially obscured, you never know if they have a bug in their firmware that could lead to the leaking of your private keys. So that's my point. That's why I'm never going to trust Ledger again. All right. Also in the news, and this really doesn't have anything to do with Bitcoin. Well, actually, it kind of does have something to do with Bitcoin. The Bud Light controversy has been raging. People are boycotting Bud Light. They have been for a while. And then they started boycotting Target for similar reasons. And I would say that doesn't really have anything to do with Bitcoin. It doesn't have anything to do with this podcast, but it kind of does. Because, for example, MSNBC is now saying, they said of the boycott of Target, if you're boycotting Target, that is, quote, literally terrorism, unquote. How many times have we heard things compared to terrorism? Anytime people don't agree with what the government's doing, they're extremists or terrorists, right? We heard this about the virus. We heard this about people that didn't want the vaccine. And now we're hearing it about the Target boycott. And regardless of what you think about the Target boycott, this is what you should take away as a Bitcoiner. I don't care whether you support Target or not, whether you think it doesn't even matter to you. If the mainstream media or the left-wing media, the media that's aligned with the current administration in the United States, are pushing the notion that refusing to shop at Target or boycotting Target is equivalent to domestic terrorism, what would it be like if there was a CBDC? If the only form of payment that most Americans were using was a central bank digital currency, now all of a sudden that makes a difference because they know if you're shopping at Target or not. If you're not shopping at Target, are you going to be treated as a terrorist? Or what if they don't want to haul people in and treat them as terrorists? They're just being hyperbolic. But what if they don't like the fact that people aren't supporting Target and they say, if you don't spend a certain percentage of your CBDC on Target, it goes away? That's one of the things about central bank digital currencies that's so dangerous. People usually say that CBDCs can be made to expire so that you don't save your money. They call it hoarding, but most people call it saving. And they can dictate how you spend it. They can say if you're using too much carbon or too much gasoline, or if you bought cigarettes or have too much red meat in your diet, they can shut it down. And now there's the possibility that a corporation does something that you don't like and you want to boycott that corporation, and the CBDC, if the government doesn't like the boycott, can be used against you or can be used to identify you as someone who used to shop at, for example, if you always shopped at Target up until today and then all of a sudden you stop using your CBDC at Target and the government wants to consider you a terrorist, that's a pretty good way to add you to a list of potential enemies of the state. And that is not, I'm not being sarcastic or hyperbolic. All right. Like I said, there wasn't a whole lot of news that I thought was very pertinent to this podcast, because even the price action, all it does is change the amount of sats we're going to be able to add to our stack. And while that's a good thing, the price is really sideways when, like I said, when you zoom out, we're basically in the same price range that we have been for months. If you're staring at those price charts right now, Bitcoin's going up, it's maybe going up, it may be going down. But functionally, it's almost exactly where it was at the beginning of this month. On the 10th, for example, we bought at the $27,680 range. So Adam Meister, he has his 210,000 block theory. The people that believe in the 4-year cycle or the halving theory, it's all basically the same thing that says that Bitcoin goes in 4-year cycles. We have a halving, and then we get a parabolic euphoria phase, and then we have a retracement, and then we go sideways for a while up until the next halving. And if you subscribe to that theory, and I don't see any reason why you shouldn't, right? Because it seems to be coming true again. Even if history doesn't repeat, it certainly is rhyming. We're reliving basically 2019, and we should expect, there'll be some ups, there'll be some downs, but basically this is an accumulation phase, and we should expect to go sideways until sometime around the halving next spring. And only after the halving should we expect the bull market to really kick off. If history repeats or rhymes, we won't see the all-time high eclipsed until 6 months to a year after the halving. So maybe not until as late as October of November of 2024. And that's not bad news. That's not downer news. That's not me being pessimistic. That's me being optimistic. And you should also temper that optimism, because just because history says Bitcoin should go sideways for another year, that doesn't mean you have a year to get off zero. That doesn't mean you have a year to buy that stack. You should be stacking as many sats as you can stack, as many sats as you feel able to stack, as you feel necessary to stack based on your personal research and your personal goals. Because if Bitcoin things are different this year, if there's a black swan event that causes the bull run to kick off early, like the U.S. default may have done, if it had happened, you may find yourself too late and feeling like you missed out. So if you're a dollar cost averager, if you're DCAing alongside of us, hopefully that's something you'll never have to worry about. And that brings us to the most important part of today's segment, and that is our DCA stack. And DCA, once again, is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, this will be our 97th stack. We started stacking all the way back on Wednesday, July 28th, 2021. So for our regular interval, I chose Wednesdays. For our equal portion, I chose just $20. The reason I chose $20 is because I wanted it to be an amount that the vast majority of our listeners could easily justify stacking. There are places in the world where $20 is a lot of money, and there are other places in the world where people blow more than $20 on a beer. So you do you, but I wanted to show two things. I wanted to show even if you can only come up with $20 a week, it wasn't too late for you, and you could accrue a stack of sats that would have a significant effect on your life. And I think we've already done that. And so far, those 96 stacks, we've converted a total of 1,920 stinky US fiat dollars, including $43.20 worth of fees into Satoshis. And that earned us a stack of 6,733,430 sats. And I had pointed out that had we YOLO'd in on July 21st and spent that money all at once instead of DCAing, we would have only accumulated 4,834,275 sats. So we're definitely at the point where DCA has beat YOLOing. This is an ongoing experiment, but at this point in time, it's looking like we have certainly done a lot better, at least over the last 2 years, DCAing than had we tried to YOLO. And God only knows what might have happened if we had tried to time the market and trade. Most people seem to be, when they try to engage in trading, they get absolutely wrecked. And we have not. In fact, we are upside down a tiny bit, but not very much at all, because we're lowering our average cost purchase every time we buy cheaper Bitcoin. And today, hopefully, we'll drop that average price down as well. So to do so, we're going to open up the Handy Dandy Cash App, because I'm currently stacking with Cash App. They're not necessarily available where you are, but if Cash App is available and you're looking for a way to stack, they are not a sponsor of this podcast. I just think they're easy. Their fees are not the cheapest fees out there, but because they let me transfer to my hardware wallet for free, they're $2.25. That $43 we've paid in fees. I think I would have paid more in mining fees if I were using an app or an exchange that charges me a minor fee to transfer to my hardware wallet. They don't, so I'm calling it a wash. But you do your research. As of last week, we announced that Strike is now available mostly globally. There are still a few places like New York, for example, where it is not available. They do not charge a fee, but they charge a spread, and they actually charge you to send money to your. They charge like a 2% fee to use your debit card to make that purchase also. So those are all things you need to take into account. If you want to use Cash App, please look at the show notes, because there's a referral link in the show notes where you'll get a promotion. Currently, I think it's basically you get $5 at the moment for using that referral code for signing up. So basically, that's free money. It's better than what you would get if you just sign up on your own. And the podcast will get $5 too, so you help support the podcast. But anybody has a referral code. If you click on my referral code and you sign up for Cash App, you'll have your own referral code that you can give to your friends and family later. That is not the same as being sponsored by Cash App. That's something they do for all of their customers. And I'm not even recommending Cash App. I just think it happens to work out nicely for me. So I've got Cash App open. I actually already have money in Cash App, so I don't need to add it. But even if I didn't, they let you add money instantly and immediately purchase Bitcoin with that money and immediately transfer it to your hardware wallet if you want, which is one of the reasons I like using them. So I'm going to tap Bitcoin, buy Bitcoin. Now, sometimes $20 is a default. I think they're messing with me because right now it's 10 or 25. And they're trying to encourage me to spend more maybe. So manually enter $20. Click confirm. And boom, just like that, we purchased another 72,140 sats at a price of 27,100 US dollars. So down just a tiny bit since I started talking. And that is going to increase our stack to 6 million. Where am I? 6,733,400. I'm doing my math wrong. Sorry, that's my old number. When I went in and modified my spreadsheet, I'm not using Excel. I use OpenOffice or LibreOffice because I refuse to purchase Microsoft Office. I might have corrupted it because it's not giving me a correct total. But the point being, we've stacked an extra 72,000 sats. And perhaps as importantly, we've lowered our average cost basis, our average purchase price by another $11.78. Before this purchase, our average price was $28,823.25. And now this purchase knocked it down to $28,811.47, which means that when Bitcoin is above $28,811.47, we'll be in the green. When Bitcoin hits its new all-time high, when it surpasses its previous all-time high of 69,000, we'll be looking really good. If Bitcoin hits $100,000 of Bitcoin, we'll be looking even better. If Bitcoin, for some reason, makes it all the way up to the $1 million mark, we'll be talking about $67,000 worth of Bitcoin just for, converting $1,920, $1,920 worth of stinky fiat into Bitcoin. Either way, we're doing substantially better than the 4.8 million sats we would have had we YOLO'd in almost 2 years ago. So that's really cool. That's the great thing about getting on a Bitcoin perspective. Getting off zero when you start looking on a Bitcoin standard, as Safety and a Moose would say. When you're a stacker, when you're a hodler, when you're a Bitcoiner, when the US dollar value of Bitcoin goes down, you're not depressed. When you're an S-coiner, when the value of their coins ultimately collapses because they get rugged or the coin just goes away because it was a failure, they go nuts. They've lost their money. But when the price of Bitcoin goes down in US dollar terms, we get to stack more, and it's awesome. It's a win-win. If Bitcoin's price goes up in terms of US dollars, we feel like the smartest man in the world. See, I told you so, kind of thing. Look at the kind of wealth, the generational wealth we're accumulating. And when Bitcoin's on sale, we're excited as well. Speaking of podcasting 2.0 apps, one of the neat things about Fountain is they have featured podcasts, and you can actually earn sats for listening to them. And as a result, I listened to a podcast that was featured the other day, and it didn't bill itself as an S-Coin podcast. He bills himself as an investor who's also into Bitcoin. He considers himself a Bitcoin maximalist. But then he had an S-Coiner on, and the whole episode was about investing in altcoins and meme coins and buying monkey JPEGs, etc. And I'm not going to ridicule this particular podcast or this podcaster. I'm not going to really get into any specifics about it. But what struck me was the difference between these S-Coiner podcasts and Bitcoiner podcasts. For example, time preference. The very first thing he said when he's talking about buying these S-Coins was the first decision you should make when you're deciding which S-Coin to invest in was what your time frame is. How fast you need to make money. And we're like, that's not the mindset you have as a Bitcoiner. As a Bitcoiner, it changes your time preference, but your time preference is about saving for the future, not turning a quick buck. And the other thing that they said was, what are you investing for? What's your goal? And then he said, because, what are you in Bitcoin for? What's your goal? That's a parallel. But then he said, what are you trying to buy? What's your goal? What do you want to purchase? Are you making this trade so you can buy a nice car? Or are you making this trade so you can buy a nice house? And just the mindset I hadn't listened to it. I don't listen to S-Coin podcasts, and I didn't know this was going to be an S-Coin podcast. It was just a featured one that I got paid like 100 sats to listen to. And it was jarring. It was shocking. And the other thing that happened that was completely the polar opposite of what you hear on a Bitcoin contest, the guest starts mocking the host for the type of car he drives. The guest has a really hot, expensive car, and the host has like a Honda, and he's giving him crap about that. Whereas in the Bitcoin world, if you have a nice car, you're short Bitcoin, right? I mean, maybe you're really well off and you have a nice car, you make a lot of fiat, but I'm saying, look at American Hodl, when he got rid of his minivan and he drove around on a moped so he could stack more Bitcoin. And the average Bitcoiner, there's the when Lambo meme and all that, but for the most part, that's just fun, right? That's memes. This guy was serious. He didn't think the host was as good of a person as he was because he drove a crappy car. That just blew my mind. And don't rot your brain by listening to this S-Coin podcast. I regret listening to it. It was a featured podcast on Fountain. I got paid to listen to it, so I converted those. I didn't convert those 100 sats. They're sats. So basically, someone's fiat got converted into Bitcoin and given to me. So I consider it a win. But man, that rots your brain. Just the whole paradigm, the whole mindset is just so 180 degrees opposite of being a Bitcoiner. And maybe it's because they say you don't change Bitcoin, Bitcoin changes you. And maybe I had that mindset in the past, and I probably did. I mean, back before Bitcoin, I used to buy stocks and bonds, and you were hoping to make money. I was never a trader. I was always buying for the long term, putting away money for my kids, putting away for their future, for my retirement, what have you. So I just never understood that trader mindset. But I did have a fiat mindset, and Bitcoin has changed that. And these S-Coin podcasts, I guess they can rot your brain. So avoid the S-Coins, avoid the S-Coin podcasts. As they say on the Cafe Bitcoin podcast, Alex Danzig always ends this podcast. It's a Twitter Spaces that's live, but he ends the Twitter Spaces, or the recorded version of the Twitter Spaces becomes a podcast later in the day. He always ends it by saying, don't shitcoin, it's bad for you. And it truly is, because it was shocking. And, they say that people that talk about, the violence and sex in movies and TV and video games desensitizes people, to it. And whether that's true or not, or whether that's bad or not, I don't care. I don't think that the problems we have in society are necessarily because of movies and video games like some people do, but I can understand how being immersed in something normalizes it, desensitizes you to it. It's like, going to war as a soldier, you can get shell-shocked. And I think listening to a bombardment of altcoiners or scammers can have an effect on your psyche, even if it doesn't turn you into an S-coiner. So I made a mistake. It wasn't worth 100 sats probably to listen to that podcast. So I probably won't do that again. Although one day, if Bitcoin hits $100 million and we get the dollar sat parity, then they'll have paid me $100 equivalent in Bitcoin to listen to the podcast. So I don't know. Beware. All right. That is all I really wanted to talk about today. Thank you again for listening. Thank you for those of you listening on Podcasting 2.0 and helping support the podcast. Again, thank you, Leggy, for the boostergram. We appreciate each and every one of you. And I will see you again next Wednesday. Hopefully I will be back in Florida, but my schedule is fluid. I was originally going to be back by now, and I'm not. I'm still in the high deserts of New Mexico at the moment. Maybe next week I plan to be in the northern New Mexico, Colorado area if I don't make it home. But one way or another, I'll come at you with another Bitcoin Bulletin podcast where we grow that stack. And until that time, though, keep on stacking those sats, you sexy sat stackers.